RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Happy Monday morning, TGIM. I will, full disclosure, I had a horrible sleep last night. Didn't get to bed till well after midnight. And of course, I try to get up for East Coast market times, which is horrible living on the West Coast. And honestly, I just couldn't make it this morning. So unfortunately for my trading partner, I did bow out of the opening range trades this morning. And if I understand correctly, they all went tits up.
Yes, they did. Tits up. That's exactly what happened.
there he is. Poor guy. So I don't know whether that was fate or karma or something, but clearly somebody upstairs did not want me trading first thing this morning. So I politely bowed out, but if anything, I should have taken my lumps there with my trading partner. It's not fair leaving him to fend on his own, but man, I tell you, I did see a really nice place in Portugal, actually, 175,000 for an acre and a half for a 3-bedroom house, fully decked out, and the guy will even throw in his car too. So at least if I did move there, then I would be doing the opening range trade at a half decent time of day. Anyway, crazy life I live here. So happy Monday morning. It is well into December. I suppose at some point here we ought to kick into Santa Claus rally mode. If I understand correctly, actually, I suppose we probably should put this back over here. We have a big FOMC meeting this week, and all of the headlines that I was reading first thing out of the gate this morning were, the Fed is going to try and talk you out of all your interest rate decreases, you crazy market analysts. Anyway, morning routine. Now, again, I want to be the demonstrator of best practices, so I don't really want to bullshit any of you. Well, I don't want to bullshit you. That simple as that. And hopefully I can just show you, what a trader's life is. I mean, if anything, this has been a good exercise to go through over the past few months, just to give you an idea of what you have to do day in, day out. But as you can see, I was a naughty boy this morning, and of course, fully noted all that in my logs, and I missed my opening range trade. Should have lost $60 today. Actually, I haven't even done any journal entries this morning. I've literally been, it's funny, like, I don't know what it is, Monday. I've literally spent the whole morning just sort of actually going through the entire market, at least all the markets I like to follow. Crude, gold, stock market, and of course, talking lots of crypto on the site. So I don't know what benefit I'm going to be for you guys today, other than the fact that I acknowledge that I was out of sync. And so as a result, I basically put myself in the penalty box and not allowed to do any day trading here with live money today. So as I said there, big econ coming out later on this week. Central banks set to challenge rate cut expectations. I have made the argument all along here that the data within the U.S. market, I don't think at present supports the idea of cutting interest rates. I think the market would like that. And, keep in mind, the market is a crack hoe. If ever, I hope all of you just made a journal entry. Note, Brian says the market is a crack hoe. So the market always wants its fix. It always wants its free money, and it'll, hum and haw and complain if it doesn't get free money. But ironically enough, I think you could actually make the argument that the fact that interest rates are as high as they are is actually a testament to how strong the economy actually is. And keep in mind, these guys, these Fed guys, they will never voluntarily cut rates unless they absolutely have to, because that's theoretically the only real weapon that they have is short-term interest rate policy. And if markets can crash, they can come in. Alan Greenspan famously in 1987 came in and said, on the moment the market crashed, he just right across the board. All right, cut rates, take it down to full percentage point. And like instantly on that event, the market bottomed and started to crank back up. Um, so the Fed will, if they can, they will raise. And they will only lower if they absolutely have to. If anything, the whole term through Donald Trump presidency, Trump kept begging, "I want lower rates. I want to make more profits on my, all my hotels and land ownings and stuff. I want cheaper mortgages." And the Fed was just like, "Nope, sorry." And the only reason why they cut rates was because of this crazy pandemic nonsense. And really, I think probably just a really big unknown to them. They were just sitting there going, "Oh, we don't know what the fuck's going to happen. So better take rates down to zero because we're shutting the economy down and all that crap." Um, if anything, and I've said this to you repeatedly, if you're looking at the United States as the place to crash in this world, you're looking in the wrong place. I mean, hell, you even look at these damn stock markets. We go over and look at things like the ES, the S&P 500. And actually, I was just tricking out my charts here just a few minutes ago. I mean, we're within a hop, skip, and a jump of brand new contract highs. And everybody remembers my talk about show me a new high and I'll show you a buy. We've got a bit of sledding to go here. It's a bunch, like especially on the 4-hour chart. This is all gaps all the way up here. So I definitely think that they're going to be filled in. Interesting too. We have a Hogue level right up in those highs. FYI, we've rolled over to the March contract now, so December's history. But we go up to new highs, and show me a new high, and I'll show you a crackle. So I don't see how you can even remotely have a conversation about lowering interest rates in this environment. NASDAQ, same sort of thing. There are the old highs. In fact, look at that. I mean, this thing's basically somebody sneezes and it'll be up at new highs. How can you cut interest rates in the face of that? It's impossible. So I'm surprised that people keep talking about, well, the U.S. is on the brink of recession. No, it isn't. I will say though, and I've said this repeatedly, and I probably sound like a broken record and probably irritating as hell. Where should you expect economic weakness? Well, out of this stupid insanity that was this stupid China nonsense. And, if anything, I feel vindicated now because, Jesus, for the past 4 or 5 years, I've been barking about how the whole damn thing is just a big con job. And sure enough, now China is in full on price deflation now. You see if you go to YouTube and watch their social media channels, stuff like the shopping malls are all empty. A lot of the sort of business expos and stuff like that, there's nobody doing any business at all. So that's what I think is actually going on. Interestingly enough, with the U.S. market coming back and sort of U.S. consumers, they're still spending money. They're still going into more debt. This actually does really, really well for Japan, being an export-oriented market. I told you repeatedly, I mean, that damn Toyota Motor Company, God, was that ever a good buy 6, 8 months ago? But probably anything that's, if I'm not mistaken, I think I saw a newer version of that Grand Theft Auto just came out. So PlayStations and all those things, they must be selling like hotcakes, like Sony. And you look over here and you see the Japanese stock market up a huge 2% move for the Japanese stocks. So ironically enough, that's the hot part of the market right now, not China. And I would definitely say, and of course I've said it repeatedly, but anything that sort of service China. And I get the impression, I mean, hell, this idiot leader of my country actually is in love with China and the Communist Party, and he would wish Canada was actually more like China. Hell, he's such a pussy. He actually let Chinese actually set up police stations inside our country to monitor Chinese expats. And, it's no freedom from the CCP here in China. So I think that they tried to pull that off down in the States, but the States balked a little bit about that. But anyway, I digress. Point of the matter here is, if you're going to be looking for economic weakness, it's going to be out of all the sort of fluffy stories that were bid up to just ridiculous levels through that last fear cycle, and now they're unwinding, and that'll probably go on for quite a while now. So that's probably our big driver here for this week. As I said earlier, it is Monday. And Monday in particular, usually they don't like to, like the US government doesn't like to come out with big earnings or not earnings, econs and, government reports, EIAs, that kind of stuff on Mondays. Very rarely do you see that. So today's actually a very light news day. A little bit of news coming out of Great Britain, but basically, I would even almost call this in line with expectations. But I don't even think that this is even reported. This comes in tonight. So basically no news here today to drive price action. So if anything, I think a market to a certain degree is basically just drifting here. And it appears the path of least resistance coming out of that end of October pivot by when it snows, the eclipse event. Holy crap. If anybody had a crystal ball and saw that was just about to happen, man, you could have made some serious money on that, eh? Wow. As I said there a moment ago, I can't see why this wouldn't break out higher here. And at the same time, too, I can't see the Fed raising interest rates in the face of that. Well, nah, I don't think we see a raise in U.S. Short-term interest rates, but we definitely don't see any cutting. That's for sure. My hunch is they're probably just gonna. I think I've shown you the interest rate picture chart that I'm expecting. I think I've shown you this. I don't think it's really rocket science here. Just have to find it. It should be interesting just to check in on China, see what's going on there. And maybe some of the broader US tech stocks. Let's see who's driving the bus there. But where is my US Fed short-term interest rate charts? Usually I have them on here. There we are, Fed funds 4-year cycles. So I think I've shown you this before. I don't think that this is really, anything earth-shattering. You can even start to see it happening. I still think that this rate cycle pivot, if you will, is going to look something along these lines. And keep in mind, from this point here to this point here, where they were actually turning, was 58 weeks. That's over a year. So I get the impression that that's basically what's probably in the cards here. And also, too, if you haven't played this game for long enough, some people are relatively new to this. They just don't know. The U.S. Federal Reserve wants to be perceived as not affecting the democratic process of this free country. Which, it's almost laughable, like, especially with my rants about the money masters and stuff yesterday, how utterly unfree we are in the West here. And actually, what we're going through with cryptocurrencies right now is a fantastic analogy of that. But we'll toe the party line. The U.S. Federal Reserve Board and the banking committees do not want to be perceived as affecting the election process. And so as a result, through most election years, they would prefer to just be on the sidelines. And I get the distinct impression that that's exactly what we're going to get. is you're just going to hear month after month, report after report. We're watching the data diligently. We believe that policy now is set as restrictive, and oh, by the way, JP Morgan's going to be in Hong Kong far longer than the CCP is going to be in Beijing. Whoops, wait a minute. That was a Joey Diamond line. I tell you, if anybody's shitting their pants right now, it should be Winnie the Pooh and CCP and Mother Russia and all that. Those countries, they're in big trouble here because the free party with free money, it's over. And you can see that they're scrambling. But anyway, only time will tell. So, point of the matter here is you can see we are at the trough, and as soon as this starts ticking up and the Fed starts getting friendly, I think you actually see the stock market and all your beloved altcoins and crypto and the whole damn thing go absolutely apeshit crazy. We just got to wait for it to happen. So, if anything, we're going through the bottoming process. We're at the very top of the money cycle. The stock market is looking very strong, poised for a super uber greed cycle. I mean, it's just humming along, doing its thing. And we are technically what? The last cycle pivoted in 2018. It's now 2023. We're 5 years into this greed cycle. So at some point, we're probably going to see the stock market start to really rock and roll here as we head into that peak, which should be like 2035. So it's still a ways away. But we're heading into this little window here. And of course, we've talked lots about this. Crypto kids, you should be able to make some very, very good money over the next 2 or 3 years in this space. So strap on your feed bag, get your trading plan rocking and rolling, hunt those weekly W's, and let's go make a pile of money. That's where I think we are right now. For the day traders, dial it back a little bit. Short-term sort of prognostications. What do we see happening here in the market? I don't know. I'm not really overly excited about these locations right now. If we look at crude oil, remember we've got this Fed meeting coming up. Crude has just absolutely puked out of late. And the talk is, at least I've heard this from 2 or 3 different locations. The Saudis don't like the fact that the Americans are starting. I think Joe Biden kind of like he acquiesced on the whole inflation shit. And you don't hear anything about Greta anymore. From what I understand, she's out sailing her sailboat around Antarctica or something like that. But the American oil patch in the Dakotas has been given the sort of permission to ramp up production as much as possible. I don't necessarily know whether Canada is producing. It'd be interesting to see what actual production is coming out of Canada. Canada is actually the second largest oil reserve in the world, right behind Saudi Arabia. But we've got this idiot in control of our country in Ottawa who's like hell bent on killing the oil industry. And, the irony on all is the apple doesn't fall far from the tree. His old man was Prime Minister of Canada 40, 50 years ago. And it was the exact same thing. In fact, he even went nationalized some oil companies in Alberta, which just pissed the Albertans off to no end. So it's like history's just repeating itself. You don't learn from history, you're doomed to repeat it. So this son of a bitch is basically going and doing the same thing as his old man did. It's like something in their DNA and hatred of Alberta and oil. I don't know. Anyway, so the scuttlebutt is that the Saudis are threatening to just flood the market with oil to try and drive the Americans and, from what I understand, the Canadians to a certain degree, because the Canadian oil is a little bit more expensive up in the tar sands there. And also, too, if I understand correctly, Brazil's actually turned into quite an oil producer as well. Venezuela, fascinating to see. The only way Venezuela can solve its problems is actually invading its next door neighbors. So, of all places, I think it's Guyana or something like that. Venezuela has decided to invade Guyana. I mean, you can't write better fiction than reality. Who would have ever thought that was coming? But I suppose the guy in control of Venezuela, Chavez brother or whatever, I think they're getting a little desperate and they're just simply running out of money. So, hey, let's go steal the money from these guys, steal their property and steal any assets we can. Anyway, that's rhetoric, I suppose. Anyway, so the point of the matter here is oil has been coming off dramatically. And actually, if you look at the daily charts on oil, it's actually projecting now. And like I said, Saudis, and you even saw like Vladdy got off his ass and went to the Persian Gulf, probably trying to plead with the Saudis, please don't do that. You're going to kill us. Because, of course, Russia, probably one of the only sources of hard currency that they have these days is the oil exporting dollars. Anyway, where the hell were we? China. Well, I mean, China actually doesn't look bad, and I think it's because of the oil revenues. But I tell you, if I get any sell signal here now, I've got the green light, and I think I'm going to break my Interactive Brokers account spread trade cherry and go and strap on this spread. I'm just waiting for some sort of sell signal here. And if it doesn't come, then I guess I won't do anything there. But China itself, I think it did break to new lows here today. This is the Hang Seng. You can see that show me a new low and I'll show you a ho. So interesting how that is a smaller AB equals CD price objective. It'll be interesting to see. I don't really see any anecdotal evidence from the indicators that this thing is ready to bottom yet, but it sure looks like the bears are driving the bus there. And if I understand correctly, the econs coming out of China are just not very friendly at all right now. So it was interesting. We wanted to check in on the China to trade. I suppose we can put that away now. We looked at short-term interest rates, so we can put that away. And of course, like I said, the primary driver of the market this week is the Fed. And what is the Fed got planned for us here? My hunch, like I said, is it's probably just going to be we're not really going to do anything. We're just going to watch. It is interesting to see how the gold market, like all the people in the world sort of got all super excited about gold to the upside. The headline prints were gold's at new all-time highs. Oh my God, it's the end of the world. Total parabolic move up, and then literally that was the end of the move. And we've now just been cascading our way lower, right back down in a heartbeat. They always say markets take the stairs up and the elevator down. So nasty bear ABCDs and sort of cockeyed head and shoulders is, which if I understand correctly, when David gets a cockeyed head and shoulders, he kind of likes to use the 1.618 as a price objective. Interesting how the AB equals CD level lines up relatively close to that 1.618. And also you can see there's a key daily horizontal support and resistance lines down in this area as well. So I suppose heading into the Fed, everybody's worried about the Fed. And maybe what we'll do is we'll circle around in the after party and we'll take a look at things like the US dollar index. I do find it fascinating how I guess it was 2 weeks ago, somebody asked me to look at the commitments to traders report. And it was kind of like, wow, that's a surprise. Actually, they're very bullish. And you notice, I mean, that was when did we do that? That was not yesterday, but a week. So that's like 7 or 8 trading days. So this is a 4-hour chart. Let's change that to a daily chart. So that was literally like 1, 2, 3, 4, 5, 6, 7, 8. So that was like right in here. And we noticed an incredibly powerful double bottom in the large specs, double top in the commercials. And what happened? Damn US dollars just grinding its way back up here. So that was fascinating. But anyway, I suppose we'll talk a bit more about that. In fact, actually, maybe in the after party, we'll leave sort of the broader market discussion, sort of picking apart who's leading the market. We'll leave that for the after party. Let's see. I suppose the only other thing we should probably touch on is good old Bitcoin. All right, so we'll spend 5-10 minutes talking crypto, and then we'll head on over and do our after party thing. I think I had been talking to you guys recently about how my next sort of big technical objective would be this 48,000 area Mountain Man 61.8. Also, this funny little inverted head and shoulders objective up top there. A midpoint of the fog and bombs 3.6 something or other. I know David, he loves to follow this. Let's say 3.64. I'll have to commit that to memory. And then we also have this significant high to low trend line. So I still think that those are the objectives on the weekly basis. We've been moving like literally straight up here for like 1, 2, 3, 4, 5, 6, 7, 8 weeks, right? Is that right? 1, 2, 3, 4, 5, 6, 7, 8 weeks as of yesterday, just straight line up. And keep in mind these are weekly charts. So at some point, this weekly candle was pretty red. Then they brought it back into the end of the week. So was this doji. So we're starting the week with a little bit of pullback here. What's the best way to say this? Actually, you know what? There's actually a really cool chart that I did. Which one is it? Oh, I did it on these. Might have done it over here. Where are you? Is that over here? I'd like to follow a million bazillion charts. The only problem is I can't remember where I put all these studies. All right, so it's not there. I even posted in the, oh, you know what? I have it on my laptop. Fudge. Yeah, maybe in the after party I'll grab it. But let's see. How do I say this in a nutshell? Actually, you know what? I think I posted in the lounge here. Just give me a second. So the point, I guess, is that I think we ran up into a pretty interesting level. Yeah, 2.618 off of this most recent double bottom. This was the charts that I was posting in the lounge last night when I was on my laptop. Here we are, this one here. And I guess that the issue here is you can see this is pretty straightforward fog and bomb stuff. I don't think this is really too crazy or too outlandish. It was also interesting that this consolidation to its breakout, its 2.618 was exactly that same level. And confluence. I think you could make the argument that this is trade location, especially for lower time frame players. And then, and the way our cadence goes is we want to see location, then we want to see indicator confirmation, then we want to see price structure, and then go. So, we're looking at like a 1 hour chart here. So we're definitely, actually, I beg your pardon, that's a daily chart. I suppose if we drill into this chart off the lower time frames, we'll probably see that this top's a little bit more well-defined. You can kind of see how the buying interest was sort of waning here. See how it's sort of coming off here. Let's see if I can find this chart in real time. Maybe actually it might have been this one. But like I said, this was off my laptop, so it's a bit messy here. All right, so yep, not a bit messy. This is very messy. Sorry, everyone. Anyway, I guess what I would just say here is, darn, it's too bad I don't have my laptop right here. Anyway, I do like this 2.618. Probably should have gotten this all cleaned up and ready for you earlier. 8 different potential divergences. 8? That's a lot. So if we were going to be following, in fact, you know what where I did it? I think I did a tweet out about this as well. So I was just like, wow, that's pretty impressive. I have that Twitter thing. Where the hell is it? Twitter. Up there, library. Okay, yeah, I'm kind of stalling here. Just give me a second. First, I mean, who on the site doesn't know that I do daily briefs? right now and would be sending me PMs. I always find it odd how somebody is just blitzing me PMs right through a daily brief. I don't know. I don't know whether you guys can hear that, but my computer's going bling, 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 bling. So here was the tweet that I put out last night when I saw this. So this was on my laptop last night. So, number one, we always say, what's 3 reasons for a trade? All that kind of talk. So number one, location. And we got like 2.618. I think that's enough to justify that this is an interesting trade location. Number two, indicator confirmation. And I was shocked when I saw this. 8 potential divergences. Wow, that's a lot. There's still potential now, though. So that's the key. And the way that I put it last night is that at the very least, if all of these divs start confirming, then what are we supposed to do? And Irani nailed it, right? Cool your jets. Doesn't necessarily mean that it's a sell, because step 3, once we do actually see these things confirm, step 3 is we start hunting for price structure to frame the trade. So I guess that's sort of the way that I'm looking at this market right now is, it was just one directional. We just kept steamrolling our way higher. In fact, actually, that must be that 2.618 there that you can see. We were not done with playing with that level yet. Right now, this is an inside bar. This is the weekly chart. And we talked about this yesterday to a certain degree. No real divs on the weekly charts here to say that, this bull run is officially over. And we didn't even really get Willie stupidly overbought. So my hunch is that, maybe this is some sort of local top here. And, the sharpshooter traders, I mean, gee whiz, that's 25,000 all the way up to 44. That's a $20,000 price range. Holy Shiite Muslim. I mean, I remember when 21,000 was the top of the market, and people were like, wow, $20,000 Bitcoin. We just moved $20,000 in the price of Bitcoin in like literally a month and a half, 2 months. This is ridiculous. So could you say maybe this is a little too far, too fast? I mean, notice like when we had this big jump, right? That low there was 29. This high here was 52. So there's another $20,000 jump in just a few weeks. And what did the market have to do? Looks like the market almost gave back almost exactly half of that move. Should be interesting just to measure that out. Hello, look at that. Doink. So could we see a nice healthy 50% retracement of this up move here? Bring us back to things like fast moving averages? Maybe even, call me crazy, maybe we even do a big Wyckoff check off of that previous breakout high. Maybe, who knows? But I guess the point here is this is exactly what I was worried about when I would constantly go on with you guys and say, don't chase, don't chase, don't chase, don't chase. Because you might, if you had gone and chased, anytime last week, now you're underwater and you're like, okay, now what the hell do I do? So very dangerous. Now, there were a few of these altcoins that were putting in consolidation moves, which set up trades. So, if you had bought, say, for instance, this Matic off of this triple bottom here, basically the market just came right back to your entry point. There isn't really a hell of a lot that's actually happened here. You just you can see we didn't hit move stop to scratch, so you're still sitting in the original trade, just twiddling your thumbs. And then there were names like this Link that actually he's come off quite a bit. Again, we didn't have move stop to scratch level hit on this particular setup. And it's just bobbing and weaving. You can see how low we got to. This is the reason why I like to have the 3 lows to risk against, because they went and took out these lows here, ran those stops, took out these lows, took out these lows. And eventually it looks like these guys here that put the floor in said, all right, enough is enough. We don't want it to go down any lower. Start bringing her back. And I still have these two lows to defend the trade. So that's why it's so important to have a whole bunch of key support here to actually defend your trade. And right now, this trade, it's been up, 50, $100. It's been down 50, $100. Right now, it's sitting down 65 bucks. So if you are quote unquote trading this move, well, you just got to act accordingly. And ironically enough, these two bullish bot setups that I posted on the site, ironically enough, I'm long these names from down off the bottoms, and I'm not even taking these trades. These are just nothing more than demonstration for you guys. In fact, on the on this link one, actually, I bought down here and I actually sold half on a double here. So, but having said that, if you did take this trend continuation trade, well, there's nothing to do here. You're just sort of sitting here twiddling your thumbs. And I might argue the same thing on the old Bitcoin. Like if you're playing this market off a higher time frame basis, this is the daily chart on Stamp. And, this is what we were sort of talking about earlier. It does look like, and in fact, if you do sort of my RSI kind of study methodology here, you can see we have a first M here. This should be what I guess teal for our first M. Is that how I do this? I can't even remember. And then our second M, that should be yellow as our trade signal. I would call this a weak signal because we're not going through the 50 line. We've just come back to the 50 line now. I suppose you could argue that if this thing starts to break down off of this bigger M, and that would be through the 50 line, then that's probably going to get a lot of people's attention. But that hasn't happened yet. We'll cross that bridge when we come to it. As it stands right now, I think this is just nothing more than just a pullback within a bull run. And the market just got a little bit overdone there. I did find it interesting that the algo, ironically enough, flipped bearish up top here. And then on the dump yesterday, fascinating, the algo actually flipped back bullish. So the algo is saying, well, we had the dump, market has corrected. Maybe we ought to get back in on the long side. I don't know. I mean, it's a tough one. If I understand correctly, like one thing that really bothers me about the crypto space right now that I think you all should be cognizant of and be very careful with your hard-earned money here, folks, is once again, and I pointed this out yesterday, the entire crypto market itself is overbought and it's dangerous. I mean, you saw how both this link, if this thing rolls over and breaks through these lows, then boom, that bullish idea is off the table. Matic, same thing. If we break through these lows, boom, you're going to start seeing these M tops come in, which means the bull run's probably done. And, if you go through the list, you can see there's a bit of red on the screen here today. There's blood in the streets. And I think this is just purely a function that the market just went up a little too far, too fast. If anything, when we started looking at things like spell and conjecturing that maybe Danny's gotten out of the penalty box and ready to go again, maybe that was a sign that, hey, you know what, the crap is starting to rise, and usually the crap rises last. Having said that, would I be able to buy some of this? I told somebody on the site yesterday, hey, just go grab me some and I'll settle up with you later. I'm perfectly fine. In fact, actually, Zoog, I don't know whether you're around. You want to go do a quick ARB? You can make a couple bucks off of me. Go and buy it here at 5,900, and I said that I'd be willing to buy it off you at 6,400, and you make a couple bucks. I'm happy with that. I don't know whether I would definitely want to buy some more if we come down into reload long zones against the bottom end of the range. There's probably better fundamental names to pick. Like this one, I'm hearing a lot of people on the site talking about, and of course, it's actually up on the day. This is one, and you can even see I put the alert here. If I can get a pullback to this weekly W level, I so want to buy this. And if I can get a pullback into things like reload zones, I'm going to buy a lot more. So, I mean, you can see that chart. It's just pretty as pretty can be. So it's interesting. They always say there's always a bull somewhere. And look at that chart. I mean, that is just absolutely textbook. You wanted, everybody, you want a freebie from the Beamish and TRI here today? Take a screenshot of that, right? I'll even give you 3 seconds to take your screenshot. 1 steamboat, 2 steamboat, 3 steamboat. All right, so you got your screenshot. This is exactly what you want to look for if you're playing the capitalist game. It's right there in front of you, folks. It's not rocket science. It's just you have to be insanely patient and insanely disciplined and only buy shit when it looks like this. But that looks absolutely incredible. Our trend line thesis, W's on other sides of trend lines, buying the bottom ends of ranges, fogging bombs, 50%, just regardless of whether this thing's the next best thing since sliced bread or not, candle body highs for trade location, trap bulls up here. This thing's sitting at $4 right now. I mean, I want to be long from 3 and change. I think it's good for $15 sometime over the next couple of years, which is basically a 5x from this bottom here. Is it realistic to try and sell half on a double, get your original money back in your hands and create a risk-free trade? I definitely think so. And I mean, from what I understand, the fundamental story on this thing is just absolutely awesome. So there you go. There's your freebie for your Monday morning. All right, I think I'll probably leave the rant at that, and we'll head on over and talk in after parties. So don't ever say you don't get nothing from TRI and the Beamish for free. There's a nice little freebie idea for you in what looks like a bit of a sanguine market. Things are looking a little challenging out there here in crypto land with good old Bitcoin off a couple grand here today. Finally correcting a little bit. So, okay, why don't we leave it at that? PMA for the win. Slow and steady wins the race. Probably best that we all just sort of cool our jets until we get on the other side of the FOMC event. We'll have a fun FOMC party later on the FOMC day. So if you like those shows, be sure to tune in for that. And slow and steady wins the race. We'll see everybody over in the after party. PMA for the win. Slow and I already said that one. Remember what your number one job is. Don't take no wooden nickels and have yourself. No, wait, and bye for now. That's how the script.